Welcome to AI TV News. Imagine opening a bill for something you rely on every day only to find the price has suddenly skyrocketed, becoming more expensive than your mortgage. For millions of Americans, this isn't a hypothetical. It's the reality they are now facing with their health insurance. People are receiving renewal notices for the upcoming year, and many are in for a shock. For one couple, their monthly insurance payment is set to jump by almost $2,000. Today, we'll explain why this is happening, who it affects, and what it means for the country. This story begins with the Affordable Care Act, often called Obamacare. The ACA created online marketplaces where people who don't get insurance from an employer can buy it themselves. To make these plans affordable, the law included financial help from the government, known as subsidies or premium tax credits. Think of it as a discount on your monthly insurance bill. In 2021, the American Rescue Plan, later extended by the Inflation Reduction Act, made this financial help even more generous. These enhanced subsidies did two crucial things. First, they increased the discount for people who were already eligible. Second, and most importantly, they removed an income limit that had previously cut off assistance for many middle-income families. For the first time, individuals and families who earned more but still found insurance unaffordable could get help if their premium costs were more than 8.5% of their income. The effect was dramatic. Enrollment in ACA marketplace plans more than doubled, jumping from about 11 million people in 2020 to over 24 million in 2025. But there's a catch. The law that created these enhanced subsidies is set to expire on December 31st, 2025. And that brings us to the sticker shock people are experiencing right now. With the expiration date looming, insurance companies have to set their prices for 2026 based on the current law, which says the extra help will disappear. The result is a massive price hike for millions. Consider a couple in Idaho, currently paying just $50 a month. Without the subsidies, their premium could jump to over $2,200. In Virginia, another couple could see their monthly payment increase by nearly $1,300. And a 60-year-old couple in Sacramento, California, earning a middle-class income of about $83,000 a year, could face an annual premium increase of more than $23,000. For many, the new cost of health insurance could be more than their monthly house payment. So why not just extend the subsidies? The answer lies in a political standoff in Washington. As of October 2025, the federal government is in a shutdown, and these health insurance subsidies are a major reason why. Democrats are refusing to approve a government funding bill unless it includes an extension of the enhanced ACA subsidies. They argue that letting them expire will create a crisis for millions of families. On the other side, many Republicans argue that the subsidies should be debated separately from the bill to fund the government. Some also point to the high cost of an extension, estimated to be nearly $500 billion over 10 years, and argue the subsidies were always meant to be a temporary measure during the pandemic. Because of this stalemate, nothing is being done. And with open enrollment for 2026 plans starting on November 1st, the renewal notices with the massive price hikes are already going out. The consequences of this inaction could be widespread. The Congressional Budget Office estimates that if the subsidies expire, about 4 million more Americans will become uninsured over the next decade. Many will face an impossible choice between paying for health coverage and paying for other essentials like rent or food. There's also a ripple effect that could make insurance more expensive for everyone. Insurers anticipate that when prices spike, it will be the healthier people who decide to drop their coverage first. This leaves a smaller, sicker, and more expensive group of people in the insurance pool.
That, in turn, drives up the underlying cost of insurance for everyone who buys their own plan, even those who don't receive a subsidy.
This increases the use of expensive emergency room services, and those costs are often passed on to everyone else through higher hospital bills and insurance premiums. From the perspective of the families facing these increases, they played by the rules and are now facing a financial crisis through no fault of their own. For insurance companies, they are caught in the middle of political uncertainty, forced by law to be the bearers of bad news. In summary, millions of Americans are on the edge of a financial cliff, facing the loss of affordable health coverage. The solution is currently tangled in a high-stakes political battle in Washington. As renewal notices continue to land in mailboxes, this abstract debate over policy and budgets is becoming a very real and urgent kitchen table issue for families across the country.